The king of Dubai.
Hello.
See, he didn't reject the title. He's like, hello.
He just soaked it up.
Yeah, hello. This one.
Yes, what's happening, Riz? Yes, Hassan.
Hey, what the?
Yes.
What are you saying, my guy?
I'm all right, bro. You good, yeah?
I got to get to your message still, yeah? I'll try and do it after this. Can you hear me, Steve? He ignored me.
Yes, Riz looking fresh, trim.
Trying. And not like Coven, though. That's how it is.
Yeah.
Coven's a mess, mate.
Come on.
Who the heck is that?
Oh, and you do look a bit homeless, ain't you? Like.
How's it
You
going?
know what? See you later.
Abby, what's that you smoking?
I've been smoking on
What's Abby smoking on there?
It's a fag. It's not.
Yeah.
I wish.
Oh,
How's it going, everyone?
All good, mate. How are you?
All good.
oh, you made it home?
Yeah, my tyre just exploded on the motorway.
You're tired?
Yeah.
You just kept going?
Smoke was coming out about a mile from my house. I was like, fuck this, I'm not stopping. Carried on home, like,
Krishna
I was a bit gassed. I've got to go and actually sort that out in a minute.
Nah. Yeah, well, yeah, running from the police. Oh, Louis. Yes, Louis. Who's letting him-
And everyone.
How are you? Louis is having a great week. Look.
Yeah.
Yeah, mate, I can't lie, I'm having a good week.
He's been drinking, bro. Like, I can see it on his face.
He's celebrating.
I need to get shot.
Yeah, I know. It's Coven. Coven, go. Go to his
I
house.
need it. If I look like this, I'm gonna have to drink myself so I can't see myself.
Oh, hey, Yan, I see your camera. It came off, yeah? Fresh.
What are you saying, bro? What are you saying, Riz? What are you saying, love?
Yeah, and you're in Pakistan. You got the blanket over you.
No.
Wait, my bad.
All my hoodies are in the wash, so.
I'm sorry.
I've got.
Hey, yo, why is our Wi-Fi so shit?
Wow.
Screaming at you.
Come on,
Fuck,
man.
bro.
1 to 10 pluses, mate.
We just
Buy some
talk
fiber
about-
optic, bro. He's on a mad one. You hear him?
Who's that, Krishna?
He's talking to his mum.
Why the Wi-Fi so shit?
Stephen, I gotta send you a reply. I'm gonna go through that after this. Okay.
Bram.
Cool, man. Cool. Javier, how you doing?
Hey, brother. How are you? How are you guys? I'm doing great. Thank you, man.
That's great to hear, man. I imagine I spoke to someone from Colombia today, and when they said Colombia, I kept going like, "I've got traders," and I was like, "Not from Colombia. They're from Bolivia."
No trader from Colombia? You don't have anyone?
No, I had one. I spoke to a guy today. I think, yeah, he wants to join. I think the new mentoring program. So we'll see. So yeah, actually, I might as well start with that. So obviously, this is Callum. I don't know if many of you have met Callum before, but me and Callum have been trading for 2-3 years now. Yeah, 2-3 years. Trade the exact same way, same work ethic, same mindset. And yeah, we're going to be doing a mentoring program, starting probably in a couple of weeks' time. Just literally teaching the strategy to begin with, one-to-one over a few Zoom, 5 or 6 Zoom calls. Then obviously have regular webinars and live trading sessions during the day. So yeah, it'll be fun. It'll be something exciting. A lot more control of what we're able to teach. Well, basically we can do whatever we want, I guess. So exciting times ahead. And hopefully we'll be working closely with Krishna as well. So yeah, very exciting, very, very exciting. So yeah, you'll see a lot more of us, and we should hopefully be launching hopefully by April 1st.
Yeah, so it's planned for April 1st, but we might just bring it forward a bit because there's a lot of people that's sort of chomping at the bit. We didn't think we were going to get as much as we sort of have done so quickly. We've managed to get everything in place. There's just Big J.
Big J.
Yeah, so there's just a few things branding wise that we're just sort of they're not compulsory for us to launch. So the things we can offer without that. So we might as well just get set up and get started early if we can. So yeah, that's sort of what we're aiming to do. We spoke about this about 3 years ago, and I think it was a bit of a half-hearted joke, and it's just all of a sudden come to reality. So I'm really excited about it. A lot of some of the people in here I know, but I've managed to.
Remember Jay?
I've seen Jay. Look at Jay.
Yeah, man. I remember you munching your
Yeah,
Nando's next to me at the course.
Astro course. Jay was my part. Jay was my guy, man. When I took that Astro course. So
No
Jamie, both been mates. Obviously, yeah, I know a few of you anyway. So yeah, again, I'm really excited about it. I know that it's going to be a value packed sort of system, and yeah, I'm really excited sort of going forward. So keep turning this on. Yeah.
But yeah, man, that's the announcement. Obviously, I left Astro last week. They weren't too happy about it. They especially weren't too happy that I posted about it. But that's the whole point of leaving, so I can do what I want. So I'm out of that environment now, which is good. Yeah, all I would say to people, I saw yesterday a lot of people were getting stressed out anyway about drawdown, especially with the Astro accounts. All I would say is don't stress about your Astro accounts, because there's no point. Especially with this sort of strategy, 1 to 5 leverage is extremely difficult to work with. What I noticed over my time there is that there is a really lack of interest and care into the actual performance of any trading, and more attention is on how many traders are actually joining. So it's a big shame. Don't get me wrong. The people who are part of the team, the actual team, Shabs, Joe, AJ, these people are all good intentions. But yeah, with myself, I am just not one of those sort of people who can do something I don't enjoy. And the only thing I enjoyed was actually just doing the webinars and the mentoring and stuff. I didn't enjoy anything else. So yeah, just had to go and do this sort of stuff, but actually enjoy things. We enjoyed making content, so we'll be obviously killing out some really fun content. Hopefully, have some fun. Obviously, once COVID's over, do some really nice meetups everywhere. So yeah, loads of exciting things ahead. And, I'm grateful for your support and ongoing support as well. Much appreciated. And yeah, we're going to keep on smashing it. Really, that's it. Just keep on doing what we've been doing. I know we haven't been doing it for long. I went away for 2 weeks as well. So I think we've only had like 4, maybe 5 Zoom sessions, and we've already seen some great progress when it comes to the clarity and sort of change in a lot of your guys' trading, even if it's not like straight to positive, but just the transition of where you were to where you are now, and then obviously where we're going next is going to be good. It's going to be very good. So yeah, all I'd say when I mentioned about obviously not caring about the Astro drawdown, all I'd say is have more focus on the skill side of things rather than caring about the profit and loss on that account. Because honestly, we're not focused on that. We're focused on getting consistent, profitable, getting you funded with someone like FTMO instead, where you get nice leverage and you get a lot more freedom, and the returns can be a lot better as well for an absolute fraction of the price. And yeah, just focusing on that, and then obviously private accounts as well, of course. Basically things that are in more of your control. I would definitely recommend that myself, because I've seen too many people stress out. I've seen people, it's really interesting, there'll probably be people in this group who can probably share with that as well. I've seen people who managed to have losses, so be down on their Astro account with the exact same trades as their personal account, but their personal account's up. And it's shocking to me. I don't understand how it works, but I'm guessing it's the leverage and guessing it's the sort of spreads and everything. But honestly, all I'd say is do not stress at all when it comes to the profit or loss of that account. Just use it, if necessary, for building your skill set and just using it as an account to sort of kind of test out your strategy. Your real sort of growth and returns and actual withdrawals and are going to come elsewhere. That's just the truth. Like, I've seen it. I've been on the program. I was there from the start to the end, of which there's nearly 800 traders now, of which maybe, I don't know, probably less than 50 probably withdrawn properly, I would imagine. And even when they do, they may withdraw once and then not withdraw again, or they withdraw once and they don't withdraw again for another 3-4 months, so and it's largely down to, I don't know what it's down to be honest with you. I don't know if it's the pressure they put on themselves, or they feel like might be coming from Astro, or whether it's the leverage or the spreads, or I don't know what it is, but there is definitely something that's happening where traders are able to somehow trade profitably with the exact same trades on their personal FTMO or any other account, but then somehow they're down or not profitable on their normal account. And like I said, it's probably happened to a lot of people in here. So yeah, so that's all I would say, because I've seen people who have really gotten into a really bad state over this last 12 months. Different people at different times, all due to that account and its balance and its profit and loss. And it's really upsetting to me. Obviously, whilst I was at Astro, I couldn't really say too much. Like, I couldn't really say don't trade it or don't care about it or anything, because I was still there, and it would just cause me probably a lot of headache if anyone was to relay that back. But as of this stage, I actually don't give a shit, because there's a lot of I don't talk negatively of anyone, because obviously the opportunity at Astro was great. I wouldn't have met any of you. I'd met maybe one of you. I think I met Assad before, and no one else. Yeah, no one else in this. I wouldn't have met any of you if I didn't go there. So I can't speak negatively about it. But there are much better and bigger things to come, and much better and bigger things that we can all achieve, even if it's not as part of together, but just by focusing on what's actually important, which is yourselves, your personal accounts, yourselves, your growth, as your confidence, your consistency as a trader. And then there's so many different sort of avenues you can go down, right? That can give you that freedom, So yeah. But I appreciate it, guys, honestly. But let me see if we can get on some charts now. It's been
that video you posted, Riz, the Joe Rogan one.
Yeah.
I think it's very relevant.
To the situation.
Very relevant to the situation. I think you picked it out nicely.
You know how we do. We try our best. Most of the time with my social media, well, not even most of the time, but it's pretty much 100% of the time. It's literally just based on what lessons I have for myself, a documentation of, like, a journal, if you will, of what I want to be able to look back on. So that message is just for me as it is much for anyone else who can, take value from it. And that's how it will always be, to be honest with you, because it's kind of what social media is. It is for just sort of putting your thoughts out there. That's the way I use it anyway. I think that's how it's actually a benefit rather than a negative, because you can see, how many people get drawn into these fake images of, not even fake images, but like inflated images of wealth, success, or even like beauty or anything really. So yeah, like I appreciate that because gonna keep posting. I was being a bit silent a little bit just because of can't be bothered with the drama of Astro. They honestly didn't want me to post that I was leaving. I don't know why. They said that, what could be better than Astro? So where are you going to be leaving to? And I said, okay. I was like, okay, that's a weird mentality you're fine. Then I just thought when I left, you know what I mean? Like, I can't be bothered to let people loads of people still messaging me about the program and stuff. So I just said, I just made that post. I made that video. That's it. I made it on the floor. The rest of the team filmed it. It was crazy. But yeah, it's done now.
Free man, bro. You don't need to feel like you can't do what you want now.
That's what I'm saying. I shouldn't have felt that way anyway, to be fair. You know what I mean? Like, but it is what it is.
Loyalty, isn't it? It brings you in.
Yeah, trust me. It's dangerous sometimes. But I'm just gonna put the screens over here. Perfect. Cool. So can you see the screen?
Yeah.
Yeah. Just one
screen is wide, which is really good.
Cool. Any particular pair you guys have been trading this week?
Standard AU for me.
AU, yeah?
Yeah, but I see a lot of these are trading GJ and GU or whatever, innit, to be fair.
Yeah, I'm in GU longs right now.
Look at GU first. GBP USD. So yeah, one thing I want to definitely talk about. Oh, I already had it. One thing I definitely want to talk about when it comes to this strategy, and where most people struggle is just, I think it's mainly in over refining. Now, don't get me wrong, we see that there are great results in the 1 minute, 2 minute, 3 minute, 4 minute, 5 minute, whatever. And yeah, great risk to rewards that can be achieved. However, we also have to recognize by doing so, we are putting ourselves at more risk because we're going so intricate. Not only risk of losing, but also risk of not being entered into the trade, which normally ends up resulting in one, us being annoyed, feeling a certain type of way, but then also us actually then having the chance of taking a trade straight after, that doesn't fit the plan. Chasing price, yeah, exactly. And just chase, because it moved away from, say, the hourly order block, but then go to your 1 minute order block, boom, you're just jumping in, you're just jumping in, or jumping in at the soonest form of order block you possibly can, which then is a completely different risk to reward and probably isn't towards the actual plan. I've seen this many times within my own trading, but then I've seen it also obviously through the mentoring that I've been doing as well over the last year. Or not over the last year, but like since showing this sort of strategy to different people. So like one thing I would definitely recommend, and sort of have to almost enforce, if you will. Now, I can't physically enforce it, especially with obviously what we're going to be transitioning into, but you guys would have to enforce it on yourselves in a way where if you haven't managed to get results from using, say, an hourly order block or 15-minute order block yet, right? Don't be trying to go into those 5 minute, 1 minute extra, because it is a knock-on effect. It's just like when we talk about structure, like the 1 minute break structure happens. Now we have to look for the 5 minute. If that happens, then the 15. It's like that knock-on effect, right? Same with the order blocks. Like if you are just jumping into those 1 minutes, 2 minutes, 5 minutes, whatever it may be, there's really lower time frames. When you haven't allowed yourself to adjust and get used to and get comfortable, and more importantly, get results from the 4 hour, the 1 hour, and even the 30 minute or the 15 minute, these slightly higher time frames, if you will, you can't expect to be able to get those results from such lower time frames, because the lower the time frame you go, the more noise that is available, right? It is something you have to train your eyes to see. It is something you have to train your subconscious and your sort of perception, if you will, to be able to, okay, I'm seeing this on the 1 minute, but I also know this relates to X particular thing on the 5 minute, and so on the 15 and so on, right? And I think a lot of people make the mistake, and I've done it before, they make the mistake of just jumping into the so-called time frame that's going to give me the best results. But the truth is, the 1 hour is just is the same as the 1 minute. The structure-wise and all the rules system that we're using is all the same. It's just different time frames that we're placing it on, right? And that's where I think people talk about what they say. How do they say, Christian? They talk about, you will know it actually as well. It's they use that term, fractals.
Fractals, yeah. So fractals is just like it's well, you can use an indicator if you wanted to called fractals, but the premise behind fractals is okay. So this would be a fractal. So basically a swing high point. So defined by a lower high, a high in the middle, and a lower high to the right. So this would be a fractal. This would be a fractal, and this would be a fractal. This would be a fractal. And that's almost defining swing points in the market. So if you were to say go into the 5 minutes, we're looking a bit squashed. A fractal low, a fractal high. Okay, so I think you can just if you just go in there and just type in. You can just go on there like that. There we go, look.
Is that what's on your charts, Tricks? I've seen on your charts when you post a screenshot, it's got these arrows on it. I don't know if he's on mute, I don't know.
Anyone?
No. Can't hear you, Tricks, man. You got audio issues, or you're on mute. I'm not sure. Look, he's looking around. It's confusing.
It's right here.
His mic's broken.
Okay. So the way you can use this is basically, it's just structural points in the market. So if you just go to here, zigzag, black, If you wanted to look, you know, there's got that line on there as well that can show you the structure points. Just makes it, you know, much clearer.
So it was kind of saying what Callum was pointing out there, and going back to what I was saying as well, from say that weekly we had up, you know, being able to understand that, okay, we're at this point in the market up here, and you can see obviously that's a low. We got our high here, would have made a higher low, and then obviously at one point would have made the higher high before reversing. We can see that from a weekly perspective, or trying to see that from a weekly perspective, but understanding that on those lower time frames, whether that be the daily, whether that be the 4 hour, whether that be the 1 hour, that's going to be, you know, becoming a lot clearer. But that's what's happening in order for this to overall play out, right? And knowing that the same rules that we apply to the 1 minute, the 5 minute, the 15, the 1 hour, whatever, is applicable to this every single time frame, right? I'm not sure where that area would have been.
Be up there on the high, yeah.
Yeah. Oh, the wrong way.
Yeah.
Yeah.
Also, I know what you were saying now when you meant fractals.
Yeah.
Meaning price is fractal.
Yeah.
Okay, yeah. So all concepts can be used across all time frames. That's the term fractal. But there's two terms for fractal in terms of fractal highs, fractal lows.
So yeah, so now you can see here, obviously that higher low there, you can see where obviously quite clear as day on the weekly, it was just obviously the bottom of the candle, right? But here on the 4 hour, you can see that its price has been trending to the upside. It's made the high, it's actually come back to fill the void, made the higher low, went to make that higher high before then reversing, right? But yeah, those same rules that we apply, like I said, from weekly, we apply onto lower time frames. But yeah, if you aren't getting results from using those lower time frames, right, such as the 1 minute and so on, to try and maximize your risk to reward, because that's what I feel like this strategy does. You have to realize that everything has a balance, right? Positives and negatives. The ultra negative thing of this strategy is greed. Greed, 100%, ultimate greed. And all of us fall victim to it, especially in the start. And the negative thing that you can do is, not negative, but the worst thing you can do, sorry, is not accept that and sort of understand that and sort of make changes because of that, right? Because otherwise you will constantly be just chasing high risk to reward numbers. And don't get me wrong, just because they are achievable, just like when you're trading normally, right, with a normal strategy, you may be able to capture 50 to 100 pips pretty frequently, right? But then when you're with that normal strategy, and let's say you're getting those 50 to 100 pips frequently, and most people kind of do, but then you're always chasing 300-400 pip moves, right? And you're wondering, why are my trades not going there? Why are their trades not going there? And every so often you get one and you're fucking happy about it, but then the next one doesn't happen again. It doesn't replicate constantly, right? And the problem is that it's the same with this strategy. Those 1 to 20, 30, 40, 50, hundreds, they don't happen often. They happen ever so often, right? They're rare compared to your 1, 2, 3, 4, 5, maybe up to 10, right? And that's something we have to accept and understand in order to not allow that greed to take over, that greed of, okay, it's like, for example, if you're using a normal strategy, you would be happy with 5% a month probably. You'd probably be happy with that. But just because now we've learned a new style of trading and we're able to achieve such higher numbers, we suddenly aren't happy with 5% or even 10%. We're there like, oh, I have to make 50, 100%. And then when it doesn't happen, we're letting it get to our head, letting it make us think that we're not good enough, or we haven't done something right, or we're not cut out for this trading life, for example. When really we've distorted our understanding of what's not just achievable, but more importantly, what should be acceptable, right? And what's realistic, right? Because you have to remember, an investor, if you're making 5% a month, that's 60% a year, and investors laughing. You have to remember that investors are getting, on average, 10% to 20% a year on their returns, on most of their investments. The S&P 500, 10% a year on average, every year, on average, right? So anything above that, an investor is thinking, wow, this is pretty incredible. So why are we not happy with 5% a month, right? Because you have to bear in mind, 5% on, say, 200,000, for example, right, is 10,000, right? It's 10,000. Who's going to complain about having that per month? Most of us in there probably are making that per month, right? So if that's the case, why wouldn't we be happy with that? And it's just 5%. How achievable is 5% with this strategy?
One trade.
Yeah. Why not do what's meant to be done, which is I'm going to make 5% monthly first, consistently, and then I'll work on doing 7.5%. Then I'll work on doing 10%. Then I'll work on doing 12.5%, and so on. Yeah. Basically doing what they say, walking before you can run, or crawling before you walk. So, you know what I mean? Like, not rushing the steps, not trying to leapfrog yourself to, you know, the top of the mountain, but taking each step as necessary, right? You know, because that is the truth. And I think you have to realize as well that when you do not, when you do rush the steps and you say jump yourself all the way to, you know, trying to make, you know, 50% a month, for example, and you haven't before made consistently 5% a month, for example, what happens is you do that 1 month, you know, because you got lucky or because you managed to, you know, your trades played out that month, as sometimes they do, you had that winning streak. What happens is it distorts your mindset into what should be possible every month or what should be happening every month. You think I need to be doing this every month. You think this has to happen every month. Now I've done it once, it needs to happen again. And the only thing that would be considered successful is only if I do more. Yeah, next month I have to do 60%, so on. Right? That's not the case. It doesn't work. What ends up happening is that people then, because of that mentality, they end up trying to force it, if you will, chasing it, which then just results actually in negative trading, you know, more stressful trading, which as soon as there's any form of stress or any form of anything that's not balanced, you know, the trading results always suffer, always. Yeah. Yeah. Sorry, guys. I realize I've been talking. The chart's been there.
Yeah, but it is very, for me, it's important what you're saying, okay? Because I mean, we've spoke about this a lot, okay? Now, if you're somebody that embarks on a trading journey, and I'm going to say, luckily, turn a profit, okay? Turn a big profit, for example. That's the worst thing that can happen to you, okay? Without a shadow of a doubt, that is the worst thing that can happen to you. You get a big win, you have big expectation, okay? And you're destined to fail, because what you need to look at is, it's just backing up what Riz said, really. But okay, we're not looking to hit the home run just for January. Okay, we're looking to consistently return 10% a month for the year. Okay, we're not looking to do 60% in January and sit through negative equity for the rest of the year. Okay, so again, with this strategy, you could very easily, okay, so without drastically changing your trading, if you just risk 0.5%, okay, and took a 1 to 5, okay, you took 4 of those a month, risking 0.5%, a simple 1 to 5 trade, let's say 1 a week, that's 10%, okay? Now, if your strike rate backs it up, and over time you develop confidence in your infrastructure, okay, you don't really have to change a lot to increase your profits. All you have to do is risk 1%, okay? Now we're doing 20% a month by doing exactly the same thing. Okay, you have confidence to take a trade risking 1%. I know many of you will already be risking 1%, okay, which is still low risk, you know, it's reasonable risk, okay, but the point is, get that strong framework sort of concreted in, okay, you've got faith in it, you can trade it without fear, without hesitation, and it's really curbing that greed and that need for more, okay, because I'm sticking to a, you know, it's solid, okay, 2.5%, you know, and it's low risk appetite, okay. Now if you can stick to low risk appetite, but you do naturally have a higher risk appetite, then you won't have any problem risking 1%, okay. Then you can just jump to 20%, just like that. You know, you're not taking any more trades, you're not over leveraging, okay. It's still reasonable risk, but you know, the profit margins are doubled. So just be patient, get the framework there ticking, okay, get it consistent, low risk, low exposure, don't leave too much on the table. 1 to 5, how many times, you know, I mean, I'm not, and I haven't been a part of the sort of Astro program, but the people that have reached out to me that say, oh, I'm leaving too much on the table, I'm watching a trade run 1 to 12 and it's hitting me out for break even, or it's coming and hitting me for a loss. it's too much exposure. Okay, so even if you let it run 1 to 5 and you take 80%, okay, I know there's always the what if it can run to 1 to 20, 1 to 25, whatever. The point is trader paid, okay, plan stuck to, okay, let a peanut ride, okay, and you move your, whatever you want to do, manage the trade, okay, manage the trade, manage exposure, okay. No one ever went broke paying themselves. Okay, this is my standpoint on everything, the crypto space, everything at the moment. I'm seeing people holding, small holdings on cryptos that are 1,200% in profit, and they haven't paid themselves. And I think it's ludicrous. It's absolutely crazy. Okay, no matter how much that's sum on a screen is, it doesn't put food on the table for your family. Okay, so pay yourself, let the account build slowly, be patient. Okay, so that's just that's just my advice on anything, to be honest. The number one problem seems to be too much exposure. So just for me, emphasize on managing trades.
Yeah. Any thoughts on that though? Any guys got questions on based on what's been said, or any thoughts on what's been said?
I think it's spot on, if you ask me. The 1 to 5 definitely a good risk to reward. I've had a bit of success with. I know I sent you that one this morning, Riz, but
no, definitely. Like with the 1 to 5, it's something that I came up with because I first selected 1 to 10, and then what I realized was that 1 to 10, though, is still quite conservative when it comes to, say, this strategy. I realized that not all my trades go to them, right? I noticed that actually, on average, pretty much almost all of them will go to 1 to 5. Obviously, they're still losing trades. They don't go anywhere. Most times, the losing trades just go straight to loss. There is no like 1 to 1, 1 to 2, or anything like that, which is fine. But the 1 to 5, the trades that do go into profit, on average, majority of them will go to 1 to 5, right? So then I was like, okay, if this can be consistent. And the most important reason why it was a good idea and something that I really implemented and started to talk about was because I know my strike rate. I've looked at the statistics. So for you guys, all of you, I would recommend you to, sync, if you haven't already, sync your account to like a Social Trader Tools or what's the one? MyFXBook, something like that. So you can learn your strike rate, no matter what it is, right? Learn your strike rate. Mine's roughly 50-50. Okay, so 50-50. I lose half my trades, I win half my trades. Yeah, it's nothing. It's not amazing. It's not bad. It's 50-50. So then when I have 1 to 5, and I risk 0.5% and 20 trading days on average in a month, it just means that 10 on average are going to lose, 10 are going to win, right? So you're taking that 2.5%, 10 win, that's 25%, 10 lose, that's 5%. On average, I'm getting 20% a month. Now, if I'm trading the maximum of $400,000 on a FTMO, for example, that's going to be $80,000, which is going to be roughly about £40,000. Actually, at this point, yeah. Well, after the profit split, maybe £30,000. I'm not going to complain about £30,000 a month. Don't get me wrong. With the strategy, maybe I could do 100% and make $400,000. But normally, by me trying to think that way and try and get that, I actually end up losing the whole account. Yeah, I end up losing more because I'm trying to chase more. Right? It's like a catch-22. Right? So if I remain balanced and I understand my numbers and the statistics, the data, right? So my strike rate, my risk reward, my how many trades I'm taking, I get myself on average a disciplined system that I don't mind sticking to because the data's already told me what it should come out as. Right? Now, if your strike rate is lower, no problem. Right? What do? You take that into account. You work out what risk reward you should probably try and aim for daily, or whether that be weekly or whatever it may be. How many trades you're taking. On average, you got 20 trading days in a week. In a week, damn, that'd be mad. It's mental. In a month, yeah. So again, if you got a lower strike rate, okay, maybe I should go for a higher risk to reward. But how many trades am I taking? Right. So if I'm taking the 20 trades, what should my risk to reward be to make sure that I'm still profitable by the end of it? Same on the flip side. If your strike rate's higher, probably your 1 to 5 is still great then.
The thing is, as long as you have a 20 20% or more
Mm.
strike rate, the 1 to 5 is fine. Okay, the 1 to 5 is fine. I know some people 0.5% risk per trade. You know, you can't get your head around that because the capital might not be there at the moment. But it's like what Riz said about the Astro accounts. I mean, I can't really speak for those, but if everyone's aiming to get funded with FTMO, it doesn't really matter the sum of money you're trading with right now, because it's about building that framework, okay, and sticking to the plan and being able to just trade it, you know, without any sort of, you know, malfunction in the process. Okay, so whether you're trading £1,000, £5,000, £100,000, doesn't really matter. Okay, and the way I say this, and actually I was speaking to Youssef about it not long ago. When we sort of developed this idea of the 1 to 5 and stuff, it was like, okay, let's be patient. Let's take it away to a demo account, okay, and let's just see if it works properly, okay? Because I believe that people undervalue the demo account, okay? I truly do, because I don't know what it is, but there's this whole fallacy in trading that people believe for some reason that, okay, I'm still doing things like placing 100 lots in a demo account just to see what would happen, but I can manage live funds. Okay, forget it. If you can't lose those naiveties as a trader, okay, and just see what would happen if you place 100 lots, forget trading live funds. Okay, because, you know, the wins, the losses, the ups, the downs, the emotions, everything, okay, they are just, you know, they are just nothing in comparison, you know, as you all know, because you've all traded live funds. But what I'm getting at is get that strong framework in a demo account, get it in there, okay, get it in there over a period of time, okay, because then you know that your edge works. You know for a fact that your edge works, okay. It's not the strategy that you're using that's causing you to fail, okay, it's you. So then you can go away and work on yourself, because ultimately all you'll do is jump from trading course to trading course to trading course. That is all you will do, trying to find the next working strategy. Oh, I see him catching this. Oh, I see. It's got absolutely nothing to do with it. If you can't manage the account correctly, okay, in a demo account, and lose those immature sort of tendencies, you can't manage live funds. It's as simple as that. You can't. So if I had sort of one bit of advice for you, I highly, I believe that the demo account is highly underrated, because it gives you a proven sort of ticket that says, okay, this strategy works. I'm trading my plan effectively. No risk. Okay, so yes, you know, you may find it easier to take trades, to manage trades, but ultimately, you know that your trading framework works. But some people never get to find that out because they're too impatient and they have to go live and they have to make money now. And they're just driving themselves deeper into a hole, because it's like, okay, I don't, you know, I'm going to go use his strategy. I'm going to go watch his videos on YouTube. Someone sent me his course, and you think you're going to pull it all together. Well, you're not going to, okay? You're not going to do that. It's not going to work. It's just going to cause you to lose a whole lack of clarity. So stick with something. In my opinion, stick with this strategy. We both trade it the same way. We both traded it the same way successfully. I can tell you that it works. Okay. Now, what you need to do is go away and find out how you're going to trade it, what works for you, what time of day you're going to trade. Okay. So I only trade from 6 till 10 every day in the morning. I look to catch the London move. That offers a 1 to, if you go through your charts, you will find that 80% of the time there is a 1 to 5 move, you know, comfortably. And that's me. I'm gone. I've walked away. Okay. I don't need to be sat there burning my eyes out all day. What do I need to do that for? Because all I'm going to do is imagine that, you know, oh, this looks good. You know, I might take this order block. Oh, there's a little liquidity void there. Yeah, I'm going to take that, this, and this. You're going to build the whole story in your head. Okay. So go away, get the systems in place. I'm trading at this time every day. Okay. I am trading at this time every day. And if you feel, you know, the clock's going, oh, you know, I might just take a trade. You know, if you're still having those thoughts and it's past your time of day, okay, until you've eliminated all that, it's not time to go live. Okay. So if Riz is advising that You don't focus on your Astro accounts too much. Maybe use your Astro account to sort of get that structure in place. Okay. And then, you know, go for something like FTMO where, you know, I don't know, you know, what you guys do for a living, but if you can turn 10% on any of those 6-figure accounts, okay, if you can't live off that sum of money, you either have expensive lifestyles or expensive addictions. Okay.
Dundan's addicted, mate, to food, I'm telling you. And the
Yeah.
gym.
Okay. So, you know, don't worry about the sum of money. Okay. Get the framework, trade the framework. No mistakes, not placing hundreds of lots to see what would happen. Okay. Lose all of that. Then, you know, then we're like, you know, we've got the solid, we know it. It's, you know, it's burned in. I know what I'm looking for. You know, someone asked you now, it's actually what you said in one of your webinars, you know, what type of trader are you? What, you know, and you couldn't really answer it. Okay. So you want to be able to go away and say, yeah, I'm at my charts every day, 6 a.m. I only trade till 10. I look to catch the London move. Frankfurt open maybe at 7 o'clock. You know, it's there, it's solid, it's burned in. Okay. And you don't break those rules. You do not break it, whether there's a trade there or not. Because some days I get up at 6 in the morning, you know, come to my charts and I'm like, oh, you know, I could have just stayed in bed. There's no trade for me. You know how it is. But that's all part of the process, you know. Fall in love with it, get that strict framework there, and that's just going to change everything. For, you know, for in my experience, in Riz's experience, you know, we've helped each other a lot over the last few years, and this is what we've sort of boiled it down to. Because yes, you do have the crazy highs, but you have the crazy lows. Okay, you have the crazy lows, so don't forget about the crazy lows that come, and that's where you'll find consistency.
That's it, guys. That's it. And I know you guys want charts. So what I'm actually going to do, I haven't been active on the markets since Dubai. I think the first week of Dubai. Getting all this sorted. Once this is all sorted with the mentoring, then I'm going to definitely get back into it. So I'm actually going to give it over to Krishna because I know he's been very active, which is great. So Krishna, I think actually one sec. Let me see. You should be able to share your charts. One sec. Yeah, here you go. You share your charts, bro.
Hope everyone's well, guys. It's been a minute since we last had a Wednesday call. I don't know why I haven't been able. I've had a couple reasons, but yeah, I've had also most of you asking me about similar sort of things. Firstly, what I'm going to do is let me know if you can see my screen. I think that should be good. First thing I'm going to do is basically run through equals, and all that sort of stuff, because that's been one of the main things that people are confused about or asking about. So, right, with equals, it's very, very simple. Equal highs and equal lows literally is just another name for support and resistance, right? And with that comes another way of looking at the market. So, for example, and all of this can be found. So if you think I'm going too fast, it can be found in all the recordings and stuff. So if I'm going too fast, either let me know and ask, or just go back and watch one of the recordings and it'll all be there. Right, basically, when we talk about equal highs and equal lows, we are essentially thinking in terms of liquidity. Right, so previously this would have been a level of resistance, okay, but we obviously call it equal highs. Now, what does that mean? It basically means that in terms of retail strategies and retail traders, everyone is basically going to be going short, okay, and above these equal highs or above this resistance level, as it's otherwise called, is going to be like millions and millions of stop losses, okay. So what that basically means is that above these equals is a liquidity pool, because liquidity equals money. That money comes from retail orders or retail stop losses, okay? So because all the stop losses are there, that's where the liquidity lies, okay? Now, the market basically runs on liquidity. Yeah, liquidity is what directs the market. So now the liquidity pool is to the upside above these equal highs. That is now essentially going to be a target for the market. So as analysts, now there's a difference, right? Before being a trader, you need to be an analyst. And in order to be a trader, you need to be an analyst first, okay? But being an analyst doesn't mean you're a trader. There's two different things. As analysts, when price is down here, we can expect those equal highs to be traded, okay? As analysts, that can be a target. Doesn't mean that we should always trade, like try getting long here and trade to target the equal highs. That is just a target mentally as analysts, because usually what we'll find is, and how we like to use this, and I'll explain a bit more in detail, okay, is these equal highs will sit just below either an entry candle or a point of interest, like that. Okay, so once this happens, the good thing about knowing what equals are and where liquidity lies is that previously, instead of going short here at this resistance level, placing your stop there, and then trying to ride it down, and then getting literally wicked out by however many pips that is, it's all happened to us, and then price going in your direction, we can be patient. Okay, how many times does this happen to retail traders? Happen to all of us as well. Once we see things like this, it just gives me more confidence, and it just helps me to, even if price runs all the way down here before coming to my entry, I know that at some point these equal highs will be raided. That's why they're there. It's a liquidity pool. It's going to attract price. Okay, and it's sitting just below my point of interest, so I don't need to get in early and get in short over here because it's a rejection of this level on the fib or whatever the hell it is that people think. I can wait for those equals to be raided, okay, and then I can look for my entry drill here. Okay, once we are actually at our point of interest. Now, what does an entry drill look like, and how do we use equals in our entry drills, right? So if we zoom into that, okay, we have our point of interest here, for example. Okay, now it's the same exact thing. Now, this is the thing that Riz was saying as well. If we saw this on H4, it's very easy, it's very comfortable to understand. But the same for me, you'll see, I'm going to draw out exactly the same thing. But just because it's on M1, it might be intimidating or it might be scary. But as Riz mentioned earlier, the rules and the logic of the market apply the same on each time frame. There's no changes. Okay, so it's exactly the same thing. Price will come in, right? And it won't hit our point of interest yet. But what people might see is even a triple top, okay, or whatever they want to call it, okay, and they'll be getting in on the second or third touch or whatever, and then trying to ride it down with their stop losses just above. Okay, it's the same thing now. Okay, what the market has done in creating these equals is a liquidity pool just above. Okay, now what did I say earlier? As analysts, that can be a target, okay, for the market. What that means is we wait, okay, for price to target that area, come into our point of interest, and then we can look to actually wait for maybe our, let me redraw that. So if we come here into our point of interest, we raided that liquidity pool, okay, and now we can look for a break of structure to the downside, and then whichever candle we have over here, that can be our entry candle. Okay, standard stuff we literally see every single day. Okay, so that's what liquidity is all about. Now, what a really nice setup looks like is this. Say we have a higher time frame point of interest, right? I'm going to draw like M1 or a lower time frame right now. Okay, say we have a higher time frame point of interest and we have price come in and it gives us equal lows or relative equal lows, whatever it is. Let me try to draw that a bit more accurately. Right, perfect. Okay, we've got that. So now at this point, we know that the liquidity pool is underneath these equal lows because that's where most of the retail orders are going to be. That's where most of the stop losses are going to be. That's where the money lies in the market. Okay, so we can wait instead of trying to long it now, even though we have a break of structure. Yeah, instead of trying to, because I think it was, I don't know, I always forget who it was that was talking to me about this, but people are trying to go long here using this strategy, but people are trying to go long here. Okay, because they've got a break of structure, but they haven't followed the logic of the market. The logic of the market says that the liquidity currently lies underneath these lows. So we're actually expecting price to purge that low and purge that liquidity and come into our point of interest. Okay, then we can look for, again, we don't enter right now, even though it's in our point of interest. Structurally, all that's happened is we've created a new lower low. So looking for longs is stupid right now, even if it is in our point of interest. Okay, what we need to wait for is price to either give us a break of structure, which obviously clearly shows bullish intent, and then come down to give us our entry here, right? Or if we're talking in terms of equals, give us equal highs, okay? And then come down and give us our entry there. Now, in this case, equal highs and bullish break of structure, equal highs and bullish break of structure provide exactly the same confluence. Why is that? Because if we had a bullish break of structure, it shows bullish intent in the market. The price gives us a clear willingness to go bullish, okay? If we have equal highs, we don't have a break of structure, but it's the same thing. Liquidity is now bullish on the bullish side, okay? And liquidity is a target for price, which exactly the same as a break of structure means that intent is now bullish, okay? Only once we get this, we can clearly, you know, and confidently take an entry here at a order block or whatever it is. So does that answer the questions that we have on equals?
Krishna, yeah, yeah, that makes sense. Thanks. But if there's a break of structure, if there's equal highs on the 1 minute and price takes out the equal highs, that's bullish intent as well.
Yeah. Yeah. So yeah, of course, because essentially that would then be a bullish break of structure, right? If it takes out these, because at this point now, say we didn't get an entry here, okay? At this point now, the equal highs have been raided. That doesn't mean that there's nothing left for us to, there's nothing left on the bullish side of things, because that raid of the equal highs essentially now is a higher high and it's a break of structure. So now, again, thinking about just normal structure and expectations from the market, now we've had a higher high, we can expect a higher low, right? Now, where do we expect that higher low? We expect it at certain levels. Those certain levels are the order blocks that we think about, the imbalances that need to be filled in the order block underneath that imbalance that we all know. We're all familiar with that now, right? So it doesn't always have to be down here. We can wait for a break of structure. Even if we don't get it here, we can wait for another higher high and then another higher low, and then get in at that higher low. As long as the entry candle fits our criteria and has that imbalance afterwards, and obviously leads to that new structural point, then you can take that trade with confidence. Make sense?
See, Krishna, if you see that on the 1 minute. So I was actually looking at GU, and GU was looking a bit crazy today. But if you've seen that happen on the 1 minute, but then on the 15 minute, just say it still looks very bearish. There's no break of structure on the higher time frame. Just say the 15 minute, but that happened in the 1 minute, and then it just like reversed. How would I know that that's bullish intent if the 15 minute is still bearish, or it doesn't give me any signs on the higher time frame?
Yeah, so the thing is, yeah, you have to understand that the bullish break of structure on the 15 minute is gonna first come from something like M1. M1 will lead to M3, will lead to M5, will lead to M7, will lead to M10, and then M15, M30, and H1, okay? Everything will start at M1. If you've got the second time frame, it will start at the second time frame, right? So you're not, if you want to wait for that M15 break of structure, you can't expect to get entries like this, because by then the move has basically happened, if we're looking at intricacy and accuracy like this. The thing though I would say is, which is quite important to understand, and it was going to go into my second topic that I've seen people ask about, is order flow. Okay, now this can be a bit confusing, so slow me down if I'm going too fast, and just feel free to interrupt and ask any questions. Okay, so let's say we have a bullish point of interest, okay, and we're looking to go long here. And let's say something like this happens. Let me redraw that actually. Okay, so say that this is now, say for example, this is M15, okay? And then, let me see. Then in this box, I'm going to show you M1. Okay, now let's say this is the situation right now, okay? Now, okay, M1, broken structure, everything's perfect. We've had that move away. We've basically got our typical entry drill that we wait for in this box, okay? But order flow is something different to structure. Now, if this price comes up here, right, at this point, and we have a 15-minute order block in that 15-minute price action that I've shown you there, okay? And it fails to break this and it starts giving you rejections there, get out of that trade. And if anything, hunt for some shorts now, okay? Because essentially, structurally, look, accumulate in this box is accumulation. I call it the entry drill. It's essentially it's accumulation, right? This is going to take place at every single higher low, because accumulation is what reverses price. Okay, so this will take place here. This will take place at the next higher low. Okay, it doesn't always mean that you're going to get that huge swing that you're looking for. Now, order flow basically means that if this bearish candle here that I've highlighted on M15, price is struggling to break through that and it's reacting, and you know, if anything, it's giving you bearish break of structure from that point of interest, close the longs if you are in any. Okay, if you're not, then you know, okay, yeah, it hasn't broken structure on M15, so price, sorry, is still bearish. Okay, and then you can expect to maybe see something like this. Price comes in, gives you equal highs on M1. Okay, purges those equal highs into that 15-minute point of interest, gives you a further break of structure, which confirms bearish intent, comes back, gives you an entry, and then goes short. This type of thing actually happens quite a lot. And then you have your short entry drill there. Okay, just based on order flow, because even though in this area here, on maybe an M1, M2, M3, maybe even M5 structure has broken to the upside, higher time frame being M15, M30, order flow is still bearish because the bearish candle is being respected still. Okay, you can be confident in holding that long once this has happened. Once bearish order flow has been violated, because that first of all would count as a bullish break of structure on M15, but it would also mean that, as I said, bearish order flow is now violated. So we can confidently hold that long. But if you start seeing something like this, close that shit. Does that
Krishna,
make
you know
sense?
what you, sorry, I had a question. You know what you said, the bearish order flow? What if that gets violated by just a wick, but not like a
Yeah,
body
then
closure?
it's done. Then it's done.
Okay.
Yeah, order blocks are to the pip, you know, and that's why you need to be careful. Like I don't know about, you know, if it's changed now, but I remember at the start, people were sending screenshots and like the box that they drawn at the point of interest wasn't exactly at the wick. Even if it's 1 pip, it's very important. What I usually do is like I zoom in. Oh, I'm not a bit wrong. Like I'll zoom in. Yeah.
I was going to say a tip with that is if you hold control when you're drawing your rectangle, it snaps right to the bottom and the top of the wick.
Yeah, you can use that magnet tool.
Oh, yeah. So the control is like the shortcut to do the magnet tool, basically.
I see how it is. Smart ass, mate. I was going to say, Christian, don't answer Hayan's question. He shaved his beard, the traitor.
You what?
I said Hayan is a traitor, mate. He shaved his beard. He's got a clean shave.
I love it, man. Can I have 12 bottles of bleach, please?
Yeah, I can't. I turn your camera off, G.
Hey, Krishna, show us your hair, innit? Don't worry about my beard.
Listen, but you shook, you can't pull it off. You need to chill out. Grow your beard back. It's not working for you, mate. You're not getting no girls in your Bollywood dance for that.
Bro, lockdown, innit? Don't worry. We'll go.
That one hurt Krishna.
That one killed his confidence. Wallahi, I'm telling you.
No, I'm joking.
But yes, does that all make sense, guys? Does that answer the questions that we've had on equals and order flow?
Yeah, it does. Yeah, thank you, Krishna.
Okay, cool. Now, what else was there? There was something else. Oh yeah, price ranges. Is everyone comfortable when and confident when I say price ranges? Does everyone know what that means? Or do we have questions about that? I don't want to go over something that people are confident with.
I have no idea what price range is.
Yeah, no idea. Cool. Let's talk about that now. Again, I think this might have been the webinar that was recorded, but I couldn't find it afterwards, which is probably why people are still confused. Right, price ranges. I've actually got we can go back on. Here was a good example. I think it was somewhere here. Yeah. All right, cool. Now, basically, this lesson, I actually learned the price action that you can see here. I actually learned this lesson right here. I didn't know how to use it properly before that, but this is where I properly understood it. Let me just take it back a bit. All right, cool. So H1, what do we see? We have bullish structure. Repeating higher highs. Even though they're discrete, they're still higher highs and higher lows. Okay. Now this basically, you know, we wouldn't be wrong in thinking that price action right now is bullish. Okay. We're getting our higher highs. We're getting constant breaks to the upside. And we can look for buyers. And that's something I was doing as well. I was looking for buyers at this point of interest. Obviously didn't get anything. But ultimately what happened is price broke to the downside. Okay. And we can obviously now expect a lower high and then a lower low. But why did that actually happen, right? And this is essentially where price ranges come into play. Now, all of this, right? All of this is internal structure. Now, just follow me and you'll understand what I'm saying. This is all internal structure, okay? Why is that? because the parent price range, okay, is from this high to this low. That's the parent pricing, okay? Everything inside the gray box is inside that parent pricing, okay? So if we look, this high is our highest high, okay? That high has never been broken, right? Until that high is broken, bullishness isn't confirmed. Even though these highs were discretely higher than the previous one, they weren't the higher high that we were looking for to confirm bullish intent, to confirm bullish structure, okay? Because this is our parent price leg. Everything inside there ultimately is just a retracement until it breaks that high, in which case we can confidently say there's a new higher high in place, right? So this is now our parent price range from this high to this low. As you can see on my fib, I have nothing apart from the 50% level. As we know, above the 50% level in a bearish scenario is premium prices. Anywhere in this range, we can look for shorts. Okay, so even though we were getting higher highs, essentially what I'm trying to say is it's important to not get caught out and understand where you are in the market. If you're still within the parent structure, the parent pricing, then you need to be very careful. Wait for that high to be taken out or looking for more longs.
I think that's where I don't know about others, but for myself, that's where I get stuck, is the parent price leg.
Yeah.
Where when I try and identify it, like, you know, it'll be like a one directional move or something. I'll be like, right, that's the move that's now broken structure. So that's the low, that's the high. And then it'll just carry on and it won't respect that structure. So I don't know if I'm marking out the parent price leg wrong or right, or I don't know. I've just always felt like I've struggled to identify which one the parent price leg is.
Yeah. I get that. And I guess the more you see, as I said, this was only when this was like 29th at the end of Jan. So I didn't even fully clock it until then. So it might just be something that takes time. But the thing is, like, you won't be wrong in saying, look, all of these are price ranges. Okay. From this low to this high is also a price range. Okay. Every single leg and every retracement is part of a price range. Okay. So you're not wrong in, give me 1 second, guys. Shit. Alright, chill out. Stop screaming. Safe. Yeah. Okay. So as I was saying, all of those are price ranges, right? But it's just, so for example, right? If you were to take this high, sorry, that low to that high, okay, we have a valid order block there. Okay. And at this point, if we go in the replay mode, at this point, you need to understand that, okay, yeah, we might have an entry draw there and we might be able to take a long position, okay? But the thing is, this order block did not lead to that break of structure here. It did not give us a higher high, okay? So, you know, you could argue it broke this structural point here. Okay, fair enough, it is what it is, but like, this is like, I don't know how else to explain it, but that is the parent price range here. Until this high is broken in this particular example, we can't, you know, we can't confidently take a new trade, a new long trade, and expect a higher high to be made. Okay. So say, for example, you do take this trade. Okay.
You're talking about that parent leg on the daily time frame though, yeah?
Is it the daily time frame? No, it's not the daily. This is H4, bro, or H1 even. This is H1.
Okay, cool. So,
okay,
right, so that's the parent leg on 1 hour, yeah?
I'm talking from this high to this low is our parent price leg. Yeah.
But
could you not?
4 hour or the 1 hour?
What's that?
Or the 4 hour or the 1 hour?
This is H1.
Yeah, no, I hear that. But obviously, and you considering the higher time frames when you're looking at those legs.
This would, so it will all depend, right? Because different time frames can present different price action at different times. So even though now, you know, this is clear on H1, on H4, it's only like a couple of candles. So like, it's just harder to read. That's why I don't really care about what time frame things are on, because different time frames are going to present different things at different times. It's just about where it's clear. So like, I don't ever say like, oh, I need to look for this specific thing on this specific time frame, right? It's just about wherever it's clearer, if that makes sense.
Okay, cool.
But yeah, so as I was saying, if you were to take a long here, you wouldn't be like, you're completely wrong. It's just that the knowledge and identifying that we're still within this price leg and we haven't actually broken to the upside can help you be smarter with profit taking, for example, okay? Because you can hold this and take it all the way up, like expect this to purge this high, okay? But you would be, as we said, greedy in doing so, okay? Maybe if you're taking along here, you know, you could do something like just target maybe this high, or an M15, maybe something like this high, okay? And that would be perfectly fine, okay? So it's not about don't trade it. It's about just be smart and knowledgeable about where you are in the market, and then be smart with your profit taking, okay? And then be ready to accept that once you get into this, let me draw it out, you know, so once this plays out, right, be willing to accept that from this high to this low, once you are in that premium end, be ready to accept that price can now actually go short. Okay, because we haven't, that higher high that we would have expected has now failed, right? At this point, once we had a new lower low here. So now, I think it was an M40 if I'm not mistaken. Okay, and yeah, sift through the time frames and identify that, okay, so now we had this bullish structure, okay, even though it was internal, it was still bullish structure, has now broken to the downside. Now we've got a lower low, okay? Simple expectations from the market, we can now expect a lower high at a valid point of interest, which would be this M40 here, okay? Price comes into that, look for an entry drill. You will get it, because I was in this trade. And then, happy days.
But Krishna, see the way the high and the low wasn't taken out and prices in that range. So you didn't wait for an actual break of structure of that whole range at the start. So see, I think it was the 1 hour time frame you were on first. You marked the high and the low.
Yep.
Yeah. So see the.
So you're saying basically I didn't wait for this low to break.
Yeah, because the next one, yeah, because the high that was an equal high. That didn't breach it, did it?
It wasn't even. Was it equal? Oh yeah, pretty much was equal.
Yeah. So how would that make you think that it's going to go that it's bearish now?
Because structurally speaking, we've had that break of structure to the downside here. Okay.
But would you not look at that as just noise in the range? No.
You could, but that's okay. So you could. That's always going to be there, right? This could have very easily. So if I get rid of this for 1 sec. So you're right, actually. This could have very easily done something like this. Yeah, so we're in this range. This could have very easily been a higher low, and then it could have continued and given us that higher high that we're waiting for, right? That's correct. You're not wrong in saying that. That's the importance of being patient and actually waiting for your entry drill. So, right, when I say, you know, I had this point of interest marked out, doesn't mean I instantly took that short trade, okay? I only took that because it was backed up by a valid entry drill at that point of interest. And when I was there and I saw that valid point of interest, I knew that on H1, for example, I was backed up by this lower low that broke structure here. So it all lined up. It was a case study, which is why it made sense. If I wanted to, I could have waited for a further break of structure there and, you know, got short somewhere else. And there was a couple of opportunities. So for here, for example, right? If you do want to wait, it is possible. Everything is there for you. Okay. So I'll show you now. Right. Oh, and also I just remembered this made equals here, I'm pretty sure. Relative equals here. Okay. So once that happened, for me, liquidity was to the downside and I could have targeted the downside. And I've had a break of structure and there's equal lows and all that sort of stuff added up. But if you do, you're right in saying you could wait for this break of structure here, which is lower than this low. Okay. And then you come back, you draw your fib and you identify that you only want to go short from a premium price. Okay. You get into that premium price, right? Then what happens? Over here, if we zoom in, I don't want to go too much into the lower time frames, but here we zoom in and, like, you know, for example, this right here is a lower low compared to this on, again, a lower time frame. Okay. Then what you could easily do is take this entry, look for an entry drill there on whatever the lower time frame you're comfortable with, and then take that trade, because now you're comfortably out of this parent price range, if that's what you were asking.
Okay, that makes sense. Thanks, Krishna.
No worries, bro. Does that all make sense, guys?
Yeah.
Yeah, man. Thanks.
I think one thing what's helped me with this is when you identify them parent legs or ranges, making sure the visibility on the highlighter is on M1s and M5, so you know exactly what range you're working within.
Yeah.
What I used to do all the time was I'd have like the H1 high and low, and then where I didn't change the visibility, I'll go down to M5 and I'll forget where I am.
Yeah.
And then you're targeting unrealistic targets. Whereas all you need to simply do, providing the opportunities there, is literally target either that high or low within the highlighted zone. And more often than not, there's always trades within it if you scale them down.
Definitely. Agreed. But yeah, just knowing where you are in the market, guys, that's basically what I'm trying to get at through all of this, right? Because, so again, another example, before you even get to the point that I just showed you, even if you're like here, or even further here, right now, your parent price leg is this low to this high, because that's what we're trading within, okay? So now we're waiting for, a point of interest in the discount end to give us our entry draw. Okay. And now the parent price leg will only change once this high is taken, which is what I was talking about. And it doesn't, and we get a break to the downside. So now, all of a sudden, our parent price leg is now this high to that low. Does that make sense? It can be a bit confusing, as I said, but go back and watch the recordings and, look for it for yourself, because it's just one or two examples.
Krishna,
Yo.
You're basically, you only, when you find clear structure on whatever given time frame, you follow that and then refine it when you need to, innit?
Yeah, 100.
Okay, cool. So like, see for this example, you're on the 40-minute time frame, you're sticking to this 40-minute time frame until your trade plays out.
Not always. I like
you're most probably refining it on the 1 to 5 minute time frame, but overall you're watching the 40-minute.
I'll watch anything, to be fair. Nah, that's not true. Just because I saw the point of interest on a 40-minute, it doesn't change anything, innit? Like if I now start watching H1, it doesn't actually change anything.
Yeah, but then to flick through the time frames like that, it will cause confusion. So don't you have like a set routine?
The strategy, bro, because that's what I mean. Like the technicals that we look for in this strategy, they don't know what time frame you're on. They don't care what time frame you're on. Order blocks will present. You know what I'm trying to say? Yeah. Like within a bearish candle on H1 is bullish and bearish candles on M15. Because that's not just pure price action. Wasn't just 100% bearish in this one bearish candle on H1. It's bullish and bearish, and that you only see on different time frames. So if it causes confusion, fair enough, stay away from it. But if you really want to get confident and fluid with this strategy, you need to learn to adapt and be able to sift through the time frames and not get too stuck. This is H1, this is H4, this needs to be here, time frame doesn't matter. Okay. Every time you change time frames, if you go lower, just think of it as like an x-ray of what you're seeing here, just clearer. It's just more clarity. That's about it, to be fair.
Okay, cool. Yeah,
would you agree, Krishna, that when all the time frames are aligning, it's more of a smoother trade?
Of course, 100%. Smoother, and you can just be more confident in it. 100% agreed. But yeah, if there's any more questions, do let me know. But that's about it from me, guys.
I got one. It's something I think I can't remember who in the group touched on it, but it was about the extreme highs and lows and the order blocks that exist there. So this week and last week, I was trying to have a look at EG, and that has a lot of consolidate, and then it has a big ass move, and it's left behind like an order block. Then it consolidates a bit, moves again, so it's left like 2 order blocks now, and then leave like 3 or 4, but then it hasn't come back to mitigate that before going. Like I get it might mitigate it like 5 weeks down the line, but it's like if I want to look to take a trade, say off the 1 hour time frame, I don't want to be waiting 5 weeks for price to just come into that point of interest. How do you then identify? Because I've seen people pick like a couple of the trades that you've taken off the screenshots and stuff.
Yeah.
It's like price will move, it'll create the void, it will break structure, and it will create a valid order block.
Yeah.
And then it will retrace slightly and break it again. And most times it's always taken kind of in the middle. So I'm always caught between, well, this is a valid order block, so why does it not work? So how do you go about like choosing that, if that makes sense?
So with that, like you have, EG is an example where you have many order blocks. So like on this chart here alone, I had like so many of them marked out. And I've said this, like I've mentioned it before, you're not going to know which one's the true one until you get your entry draw at that specific point. So I don't have them all drawn out like this because then the chart's just messy, but I definitely have them in my mind. Okay. Now the way you do go about trading something like this is because you're right. You're not going to sit there from this low to there for how many, like for 2.5 days waiting to get in that short. So what you would do in that sort of sense is the same thing. It's just like, what are your expectations from the market? So here, for example, right, we're obviously at the low. We know that there's all these gaps to fill. So once we get this breaker structure here, we know that, okay, prices are bullish for a retracement. That retracement could be till here, till here, till here, or till here. That's something we're not going to know. Okay. But what we can do is then look for long positions to even the most recent structural point. For example, we have this one order block left behind here, right? And then what we can do is get long there and set our target at the most extreme, but then every time it gets to a potential, potential bearish order block, set an alert. Once it gets there, look to see how it's reacting. If, okay, yeah, it's reacting short, then close your long trade and look for shorts. If it's not, let the long run. Does that make sense? Until you get to the order block where it does give you that proper reaction. That way you don't miss out, and that way you're not sat there waiting. Okay, but other than that, if it follows the rules, if it leaves a void and it leaves a new structural point, it is a valid order block, right? You might see none, or you might see 10. They're all going to be valid if it follows the rules. It just requires patience to wait for the correct one. And you know what you're saying, it could be a situation where I'm on H1, for example, right now, and I could mark out this one. Yeah, and of course it might have just reached it, it might have just missed it by a couple of points because obviously my drawings are very accurate right now. But that's a situation where, am I going to do that and narrow my chances and have the tightest order block I can find, or am I going to leave it on something like H3 where it's nice and clear and give myself more chance and opportunity to actually get in the trade? Does that make sense as well?
One thing I'd like to add is just like when it comes to what people say, you know, I don't really want to wait for 5 days or two weeks or whatever it may be. But the truth is, why not? You know what I mean? Why not wait? You know, because at the end of the day, if we're sticking to our rule set and we're looking for the best possible trades, why not wait for the best trade? I get it. Obviously, it's hard. It's that impulsiveness to want to trade. Obviously, want to be in a trade. You know, and seeing potentially smaller time frame opportunities that might not be the best sort of trade, but yet could still be fitting the rules that we want to take. I get that, but I would always say, like, you know, at the end of the day, you want to be able to take the best possible trade, you know, whether that means waiting for hours or or not. It's up to you, obviously, but I would always say, like, you know, patience pays. You know, it's a classic saying, right? There's a reason why it's a saying, because it's true. But yeah, what Krishna said as well, like, you know, you won't know which order block is going to be valid until you see a reaction at times, right? And then getting it after. So yeah, but I think there's a great session. I'm gonna get going now. I think Krishna, you gonna get going now as well? Yeah. Krishna had his McDonald's. I saw him, even though he has that little background screen. He pulled out that straw. I just want to say a few notes on. Let me see one second. Let me just get rid of the spotlights for a second. You and off me. Cool. Few little highlights. Obviously, Louis had a fantastic. I think it was last week or this week. I'm not sure. Yeah, this week. This week, yeah, absolutely fantastic week this week. So everyone, big round of applause there. Big shout out to you. Much love to you as well, because I know obviously how much work you've been putting in and the graft. Big shout out to Dun for getting the Mars glasses. It's incredible. Yeah. Big shout out to Hayan for feeling confident enough to have a clean shaven face. It's incredible. But much love to all of you for attending and spending your evenings on these calls with us. And one thing I wanted to mention is with the new thing, we're going to be doing like an affiliate scheme where it's per person that you refer to. I know a lot of you guys get DMs a lot, and then either you can't be asked to reply to them because a lot of them are deadbeats, I understand, or you reply to them and you don't know what to do with them. So if you want to send them to us, then it's going to be £100 per person. If 5 people join in the month, we'll double it up to £200 for every person. No, not 5. 3 people, sorry. So 3 people join up. Once the 4th person joins, then you get £200 per person thereafter. And that's the way we want to kind of just keep it sort of, rather than doing all that bullshit fucking advertising and all that shit, just keep it word of mouth, and then people will approach you guys because you guys have been our team for good. Yeah, a lot of you have been our team for over a year now, or coming up to a year maybe, and then some of you have been with us for a couple of months, but you're still it's family, right? So yeah, that's the sort of mindset we're gonna have. We're having a website designed, the whole affiliate link thing and everything created. But for now, anyone who you say send, just let me know, please. So send me like a screenshot and make a list of the names in your notes, so that if they do join, you can say to me, hey Riz, I sent this guy, and then I can just pay it out. So but I appreciate all your support as always. And yeah, just keep smashing it. And all I'd say is with the group, like I said, with screenshots, as long as your guys are happy with screenshots and sharing charts, just continue to do so, that's fine. But if for any reason you feel like it's hindering your mindset or sort of having an effect on you, just say it in the group. Like, feel free to be open in the group, because at the end of the day, everyone, let's say one person says it, I have a feeling that everyone's that sort of like-minded and sort of positive in the group that they will say, okay, we'll stop if one person says it. So if there is one person, anyone who just feel that way, feel free to say it. Like, no one's going to care, no one's going to have any hard feelings, because it doesn't make too much difference either way, to be fair. But as long as you're happy to do it, continue to do it. Like, I'm not putting rules on that side of things. But all I would say is just work on what everyone says. The recording is on Callum's laptop, so I'll probably put it up tomorrow at some point, just because I'll have to retransfer it and I need to go right now. But just take on board everything that was said today, because a lot was said that I think will be very beneficial when it comes to the mindset, the psychology. Even Krishna, what he went over on the charts as well, was very beneficial. Definitely, and should give it a lot more clarity, I hope. And let's just keep crushing it. Let's keep just putting time in. And again, I know all of you, except pretty much all of you are on the accelerator program, and I know that, like I said, with the funding, it can be stressful. Just don't stress yourself out. So honestly, don't allow yourself to feel stressed out because of whatever performance is happening on that account. I promise you, use that account to your advantage of allowing yourself to say, okay, I've got this account of X amount of size that could be larger than what I'm used to, and I can trade this without any fear, because you're not liable for any losses. You already paid your amount, so you already paid to be on the program, so it's not like you know what I mean. Like, it's not like someone's gonna come to you and say, oh, you've lost 40% on this account, pay us that money. So any losses you have, you're not liable for. Use it for experience, exactly like what Callum just said there. Yeah, so use it for experience. Once you're getting confident, regardless of whether that confidence is just based off you being consistent, but yet you're not making that much money because of the Astro account, no problem, don't worry about it. But once you've seen that consistency, you can then have confidence knowing, okay, let me go to FTMO, let me go get funded with 400k, and that's it, game over. Simple as that. We are blessed at this opportunity that we have something like FTMO, for example. Or even if you start to get confidence and you start to put together a portfolio, you can get investors, But more than likely, the FTMO route is much easier and and it's smooth, and we've done it. I've done it. Yusuf's done it. Krishna's done it. Stephen's done it. Callum's done it. Who else has done it? I don't know. Noah's done it.
Yeah. There's a massive opportunity with prop firms, okay? Because certainly when me and you started, there was unnecessary losses. I don't really need to talk about the the sort of
thousands,
thousands
tens of thousands.
No one's going to tell you that, but we don't really need to discuss those things. But at the end of the day, those are inevitably going to happen, right? And you don't need to go through that, okay? Because it really comes back to what I said earlier. Get the edge nailed, okay? Get the edge nailed. Your edge works, okay? And if you go live with a small account and that little switch happens, okay, that little live psychological switch happens on a small account, you can really limit those losses, okay? get it nailed down on the small amount, okay? And then you're just gonna see a complete transformation. And this is another thing that I would also recommend from my own experience. When I jumped to 6 figures, and this is what we spoke about, Yusuf, you know, seeing numbers on a screen, and that's where I think that demo accounts are sort of underrated. If you're seeing 100K on a screen, okay, and you're just risking £500 per trade, the more comfortable you get seeing those numbers on a demo account or not, okay, because you're looking for the same percentages, you're looking to trade your edge, okay, the more comfortable you get with those numbers, it will be an easier transition. It's 100, I can't stress how important it is. So, you know, if you're looking to trade 100K, 200K, 400K for FTMO, set a demo account up, trade it at the same time, get used to seeing the numbers, okay? Just that visualization will give you an edge. It will give you a huge advantage. Okay, so that's my advice. You know, you've got the framework, you've got the strategy, and I know some of you personally anyway, and I can see that, you know, the growth in some of you is just, you know, Jamie, you know, personally, I've spoke to you a lot and I've seen your progress, you know. So I'm buzzing for you. I'm absolutely buzzing for you. So keep it going, and yeah, just smash it, guys. Just smash it.
Yeah, appreciate it. Everyone have a good evening, rest or day, I guess, depending where you are. And yeah, recording will be up tomorrow, and yeah, I guess that's it really. But yeah, hopefully we'll catch up again next week. Any questions, just feel free to send them to me directly, or even I'm sure Krishna or even Callum. And yeah, we're ready, man. We're ready. And what was I going to say? Just done again. Those glasses, mate. Send me a link.
What are they for?
I don't know. I don't know what the fuck.
They're blue light glasses.
They're
They help you sleep.
because the teeth are too white.
What's that for?
His teeth are too white. Look, shine it. Shine.
Are you going on the sunbed?
What? Yeah, something like that, yeah.
They're like sunbed glasses.
They're massive, then. You need to get the ones I got.
No, because I wear my glasses sometimes underneath them. They're made for, so they're glasses over glasses. For blue light.
Basically, I'm making fun of you for having glasses. It's terrible.
Yeah.
Sorry. I'm sorry. I apologize.
Thanks, Riz, yeah.
I apologize. Wait, how many are there of you? There's quite a few of you in here. Oh, I'm outnumbered. Oh, no. No, I apologize. But anyway, yeah. Dun, I need to catch up with you anyway. I'll try and do so tomorrow if you're free.
Perfect, yeah.
Yeah, I've done that already, yeah. Yeah, but remember, guys, affiliate-wise, please keep track of them if you are going to do it. Just make a note, send me a screenshot, but also make a note for yourself. And if people join, then obviously we'll do payouts every month. And eventually we're going to probably within a month, hopefully maybe 2 months, we're going to have a full website. We're going to have a full affiliate side of the website so that you guys can just log in and it'll be easy to keep track of. And we'll know as well on our side, and every month we'll be paying out. And it'll be pure cash, none of this bullshit about, you know, £100 in your trading account or some shit. So yeah, small little dig. Anyway, have a good evening, guys, and day if you're in other parts of the world. We'll catch you all soon. Yeah, take care.
Thanks, Riz. Thanks, Callum.
Thank you, guys.
Krishna.
Take care.
Appreciate it, boys.
Awesome, man. Yeah.